Congratulations, your business just crossed the $1 million mark. This is a great feat. This is something that you should be proud of. This is something that every business yearns for. The, the big number, the 1 million. Every business has different goals. Every business has a different cross threshold where they have kind of like in their history where they want to get to. But obviously, clearly, $1 million is kind of like the starting point to when you realize that now your business is going in the right direction, where you feel like things are moving along and you're starting to see great profits. You know how we say here, Upfront CPA is with greater revenue comes greater responsibilities. I've been a CPA for over 15 years, and I've seen how business, when they transition, when they grow, and especially when they hit the $1 million mark, especially, there's a couple of things that you should be looking out for. So today, I'm doing this video when I'm gonna give you 3 of the most important things that as a business you should be looking out for when you hit this special threshold, when your business makes its first million. Okay. So depends on what type of business you do. I have many clients of many different industries. One that comes to mind right away is construction. It's one business where the $1 million mark can kind of sneak up on you. It can grow very quick. And one thing that you want to be looking out for, one thing that you want to prepare for is if you don't do things the right way from the beginning, if you're not prepared for that $1 million yet, it can kick back, it can fire back on you. Especially it fires back in the form of surprises. Okay, so one thing that businesses, what we try to avoid, as a bit, something that can kind of push you back or can hold you back, some of that growth that you worked for so hard is surprises, is some things that you didn't plan and they just snuck up on you. Okay, I have many clients that have reached this level of success. They did not plan, they did not project, they did not have a good working plan to assess, to kind of prepare for, and this kind of really snuck up on them, and it really kind of hinder on their ability to take the business to where they want it to go. And like I mentioned, construction is a big business where this comes to mind, because like what happens on a business like constructions or some others that I have clients is it can grow very quick. So what happens is, you're running your business, it may not be it's at a more reasonable and manageable level where, you can maybe hire 1 or 2 people, where you can have, I don't know, a cousin or a family member to run the bookkeeping, you can have like a low level tax preparer that, it charges you, whatever price at the end of the year, and you're good to go. So, when the business is running at a low level, maybe you can get away with that. But once you grow, and like I said, the $1 million mark is really the sweet point, is when this type of this format is not gonna work out for you. I can guarantee you. What's gonna happen is you're gonna leave money on the table. You're gonna be hit with surprises, possibly IRS letters, especially when it comes to payroll. When what we've seen here at Upfront CPA lately is that there's been quite a bit of issues with payroll. Number one, when they're being done manually, and number 2 is even if you hire a third-party solution, sometimes there's just becoming more and more problems with payroll. So it's something that you want to look out for. So without further ado, I want to talk about the 3 main things that are going to help you grow that are going to help you minimize taxes, and it's going to keep your profits working for you. Okay, so number one is optimize your business entity and tax election. What does that mean? That means that when you start your own business, it may not work for you to keep that same structure that you started with. So, usually most businesses, or the majority of businesses, they start off as a sole proprietorship. Is one that is very, very, very popular, because it kind of reduces on the tax responsibilities. You don't have to do as many tax forms. It becomes like more on the cheaper side, right? So this is why this is a very kind of common practice for a business that starts off as, especially when it starts off as a single member LLC. Usually that's the automatic tax designation. Okay, it's disregarded for taxes. It goes on your personal 1040 tax form. Not a lot to do there. Okay, so usually that's how business start off with, but it's at some point it's not gonna be tax efficient anymore. Now, you've probably seen a lot of videos, a lot of people talk about how when is the exact moment that you want to switch over to an S corp or a C corp or a partnership. And let me tell you right now, that specific or silver bullet point, it does not exist. Okay, the truth is, it's different for everybody. It depends. There's so many variables that are going to dictate whether it's the right time for you to make the switch. And I cannot emphasize this enough. Can't tell you how many clients have come to me where, because they watch a YouTube video, it triggered them to, okay, I switch over an S corp, or I actually got out of an S corp and it was totally the opposite of what they should have done. Okay, because a lot of accountants like to just give silver bullet advices, or just one size fits all. And let me tell you, that doesn't exist. Okay, the one thing about taxation, especially here in the U.S., is that it's very different for everybody. There's so many options, so many things you could do. That to say that if you hit this amount of income, switch, it's a no-brainer. It does not work. It is not tax efficient. Here at Upfront CPA, what we do is we can give you a free consultation. We can show you how we work, how our processes, and right off the bat, we can tell you, like how working for us is gonna help you save on taxes. It's how it's gonna alleviate some of that hard work that you probably don't know about. You didn't study to be an accountant, so why do the accounting work? There's some of these solutions like QuickBooks that will tell you, it's all super easy, but QuickBooks and even AI these days does not teach you how to be an accountant. So there's a lot of things to look after that. Okay, so another one so that's number one. Like, should I switch over to an S corp? Should I switch over to a C corp? So depending on the stage of your business, it's gonna dictate whether you should make that switch. It's not a silver bullet solution. It depends on your income. It depends on your expenses. It depends on whether you have payroll. It depends on whether it makes sense for you to pay yourself via payroll if you're still doing distributions. A lot of that is going to affect whether you should make the switch over or not. Okay? And why do we say this? Because as you hit the $1 million, that's when the IRS starts looking at this more closely. Okay? Obviously, you're earning more revenue. And as you earn more revenue, especially depending on the tax category that you're under, your chances of getting audited may increase. Okay, the IRS, they like to promote that audits are very random, but it turns out that depending on the type of entity that you have, the chances of getting audited increase or decrease. So that's why you want to do things right, because your goal is to set up the right entity where you decrease the chances of getting audited. And that if you do get audited, then you have the right solution, right? That you actually have a CPA or a high level accountant that can back you up and can provide support if that day ever comes. Okay, so higher scrutiny from the IRS. You want to be prepared. It's there's tax efficient. One thing that you want to look at in this designation is like, do you want to be accrual? Do you want to show your books? Do you want to file taxes on the accrual basis? Is it better to do on the cash basis? All of this is going to affect how you report your income, how you deal with taxes. So this is going to be key when you hit the $1 million mark. That's when you want to sit down with your CPA, go over the numbers, and go over them in a way that makes sense, right? A lot of my clients, when they come to me, they tell me that, for example, I never met with my CPA. He just told me to do this, and I did it. I think it's important for every taxpayer to know what they're getting into and why. You may not necessarily know all the caveat and all the inner details of why this and why that. Maybe not down to that level of detail, but you should work with a CPA that can at least give you the high level instructions and why these things are going to work on your benefit and why the alternatives, do not work. Here at Upfront CPA, we take that very seriously. We sit down with you. We show you where you're at. We work your numbers. We'll show you the alternatives. We'll show you how switching from one might save you. I've had clients that just with one consultation, they're already saving over $50,000. It's that simple. And it just really comes down to that number one point, which is making the right selection at the right time of your business. Okay? So, a business key for you. Consult with your accountant or your CPA during the year. Do not wait till taxes are due to make this selection. If the $1 million comes in September, you still have 3 months to go over. It's especially true if the year hasn't ended. Very important. Timing is key here. Okay? So that's with point number one. Now, point number two is master estimated taxes and cash flow management. Okay, so when you make $1 million in revenue, depending on how you do your books, how you handle your accounting, and depending on the industry that you're in, that the fact that you have revenue may not necessarily mean that you have a ton of cash, right? So just to give you an example, I have a lot of clients that during the year or during the month, they're creating a lot of invoices, right? So some of these invoices may get paid long term, some of them are short term. So, even though the revenue is hitting your books, it doesn't necessarily mean that you're getting the cash right away, or it may come a month, 2-3 months after. So why is this important? It's important for key components here. Number one is cash flow management. Right? So you don't want to be at a point in your business where you're going to come to that embarrassing moment when you can say that you're making $1 million in revenue, but you have no money to pay your staff, right? Or you don't have money for rent, right? So how many times does that happen? It happens quite often. And all it comes down to is planning, is doing a budget. It's just doing very simple things that seem like hard work at the beginning, but just as simply as working with a CPA that's going to help you, it can just save you from so many headaches, so many embarrassments, and like I said in my point earlier, so many surprises that are gonna come your way. So that's key number one. Key number two. That's number one. Number two is why is cash flow important is estimated taxes, right? So, a big misconception that I see among taxpayers and clients of mine is at the beginning, everybody thinks that, you're paying taxes once a year, right? And this is so far from the truth. This is not how the tax system works. Really, how it works is you're supposed to pay estimated taxes on a quarterly basis. If you don't pay taxes on a quarterly basis when taxes are due, meaning when you actually owe taxes, because if you don't owe taxes, it's a non-starter. But if you owe taxes, you're supposed to pay them on a quarterly basis. Now, for a lot of people, it may not be important because they don't care to pay the penalty when that happens. Because honestly, it's not a huge number, but still, $600, $700 may not be like a lot. But when you're in that $1 million revenue, you're growing, you're clearly doing things right, but cash flow is key, right? And throwing away money when you don't need to, it's very important for your business. It's really what you should be your main focus at that point. Okay. So estimated taxes is very important. And it becomes non-negotiable for the IRS. Okay. If you're making over $1 million and you're not paying estimated taxes, you are putting a big, a bullseye on your business, an audit me sign, and you want to avoid this. Okay, it's very simple. You can just run some projections, and this is especially true after you've been consistently growing. Okay, once you hit that $1 million mark, you're continually to grow. It's now $1 million plus. Estimated taxes are gonna be key. Okay, so one of the things that I work with my clients is especially when they may have some cash flow issues, is we work a tax reserve type of thing, where we're putting aside some money for estimated taxes. Okay, this is obviously it's not just a simple math that just gonna go in and just do like a rough calculation just of some weird numbers that don't make sense. No, the plan is to just look at your overall situation, do very good like specific projections, look at your numbers at the end of the year, and look at projections, look at estimates, look at possibly doing payroll for yourself. There's so many things you can do to avoid pitfalls here that are going to be very important for you when it comes to tax filing. Okay, and the tax reserve is really a good idea, because then it avoids. I've seen situations where people have to maybe even borrow to pay for taxes. It's almost an embarrassing situation that could be easily be avoided. Just by doing a simple solution, just by taking the time to give the importance that this takes. Okay, because a lot of business owners, rightly so, they're focused on growing the business. That's their number one goal, and that's what they should be focused on. Okay, their focus should not be on tax advice. If they're doing that, if they're watching videos on YouTube, they're wasting time on YouTube. What they should be doing is focusing 100% or a high percent at best on that goal, and leave this to experts that are really going to help you. And like I said, a tax reserve is a good idea. It's going to avoid so many problems down the line. You're going to be thankful. Okay. Poor planning leads to cash crunches, halts expansion, gives you headache, creates anxiety, maybe even be embarrassing situations. So, and I cannot say this enough. This is especially true if your business is seasonal. That's number one. I can't tell you how many business owners just come to me with their head spinning, with a lot of just don't know what to do, because they don't plan this right, because they don't do a budget when their business is seasonal. Having a seasonal business can be good if you know how to work the system. If you don't, it could just really be a dead end for you. Okay, when it comes to high seasonal businesses, planning and budgeting is key, because it's easy when you go through the periods of high, where you're getting daily, weekly, monthly revenue at high levels, and you think that is the best time to not plan for the whole year and just expense everything at that time. Um, so what you want to do is you want to set yourself a budget, yourself a timeline where you can spread some of those responsibilities throughout the year. So you can kind of just look at your business more of on a either a yearly, a 2 year, or a 3 year plan where you can break out that income in a way that makes sense, right? It's not that in the 3 months that you make money, that's when you have all your expenses paid. You don't plan for taxes. You spend everything. That's a situation that you want to avoid, especially when you're a seasonal business. So what this means is take the opportunity whenever you have the chance to sit down, create a budget, help yourself. You're gonna be thankful when it comes to tax filing season, and you meet with your CPA when you plan this out and you have no anxiety because you know what's coming, you know that you prepared, and you are pretty much guaranteed that you have like little or no surprises. Okay, so that's my point number 2. So that leads me to my third and final point: what to look out for when you make your first $1 million mark. So that's to maximize deductions, credits, and retirement contributions. So this is very, very key. These are some of the, I want to say, not so flashy discussions that I have with my clients, right? So when it comes to credits, deductions, usually these are like technical items that most people really don't care too much about, right? Oh, credits and deductions, they're more focused on bottom lines and revenue and profits and stuff like that. But when it comes to credits and deductions, trust me, your CPA is gonna grill you on these type of what transactions you can categorize, where you can work certain transactions to make sure that you get credits, that you get deductions, that you maximize your contributions, whether that's on an IRA, whether that's on a 401k, whether it's on a self-employment plan. There's so many things you could do that it's basically gonna switch. Possibly just overpaying the IRS, just basically give them a check that they don't need, that you can pretty much either keep on your pocket or even better, invest it on your future, okay, or your future, or your kids' futures, right? Some of these retirement plans, some of these plans, they let you save for college funds, right? They allow you to put some money for your kids so that when they go off to college, and those are flexible. Sometimes it requires graduation. Some of them you can liquidate even if they don't graduate. So there's so many things you could do, so many options, so many opportunities, that just not look at the worst thing you can do is just avoid them. And this is something that I speak very frankly with my clients. Retirement is something that whenever you're in your 30s or late 20s, early 30s, it's not something you're thinking too much about most of the time. But trust me, if you start early, you're gonna see the difference when you're in your 40s or in your 50s, and it turns out that you've had a big chunk of your profits just put away to ensure that you have a great future ahead of you. Okay, so it can, so we're talking about even possibly when you're making that $1 million mark, we're talking about sometimes 6 figures that you can save just by doing, just by looking at some of these contribution plans. Okay, so there's also some advanced deductions, like there's the R&D, the research and development credits, that can really help you. This is especially true if your business is getting into some kind of AI solution or some kind of technological advance to your business, R&D credits are super good credits that can truly help you. I see huge differences when it comes to some of my clients that have been able to utilize this credit, and it's just a simple. There are obviously clearly some requisites that you need to complete, especially with this credit. But this is a big one: the research and development. And like I said, if you're making over $1 million and your business is involved in some kind of IT, whether that's just creating some application that it's custom to your business, whether that's creating getting into some kind of software that it helps automate some of your business processes, any of that can go through the R&D credit. It can make a huge, sometimes, like I said, six-figure difference in your bottom line. Also, as I mentioned, the retirement plans, the 401ks, all of those are simple plans that can make a difference for your firm. And some of these credits, like some people don't know, but it's like you can even work with, even if you're your own employer, you can work with some matching solutions there, where you can contribute some of it yourself. You can have your own company match some of those numbers at sometimes 3-5% company match, and you're taking that as a deduction to your business, and you're putting it into retirement. It's a no-brainer solution that it's just gonna, like I said, put more money in your pocket. You're keeping you're putting that money to better use than just giving it to the IRS, which in my opinion is the best thing that you can do. So, and why is this the best thing you can do? Because the IRS is offering it to you. They're giving you that incentive. They're almost telling you, don't give it to me. You have so many options. So if you have that, why just give him the money? It's a no-brainer. All it takes is, like I mentioned, just a consultation, just to sit down with your accountant, go over the numbers. We have a lot of my clients already have their own financial analysts that we work with. So if you have a CPA, if you already have financial analysis, have them work together. Have a consultation where you talk to both of them, and you tell them, hey, put me on a plan where I save money and where I can put on my retirement. That's something very easy that you can do. Okay. So this is important. You want to audit your expenses quarterly. You want to turn everyday cost into tax and fuel your investment. That's what you want to do when you get to when you get to that $1 million mark. That's gonna be key for your business. That's gonna be key for your success. Here at Upfront CPA, we celebrate this. We work with our partners and our clients to make sure they get there, and if they get there, so that they keep more of that money on their pockets. Okay, so if your business is approaching $1 million, if you're in whatever you are in the United States, you don't have to call me. Call your local CPA. Call the high level accountant. And what I always say is, if you notice that your CPA or your accountant is not asking questions, if they're not trying to find out where you're at, if they're not giving you some of these advices, especially when you're making over $1 million, that it might be just just maybe call another CPA, see if that works for you. It's really simple, and yeah, it's a simple solution. Scaling is exciting. Progress is what you want to get to. Here we live in a country where success is rewarded, where it's encouraged. It's being your own boss, doing your own business. It's part of the American dream. It's something that is achievable, and clearly at Upfront CPA is something that we help our business do. So I would like to thank you for taking the time to listen to my to this conversation, to this to me showing you how you can help yourself and how we can help you help yourself when you've hit the $1 million mark. Thank you for your time, and I hope and if you like this content, I hope you follow us, and you link, and you become you subscribe to our channel, because there will be more of this coming in the future. Thank you very much.